This is Anthony Parent of Parent and Win, LLP, the IRSMedic, and this is part 7 of our IRS Fresh Start Program webinar. We have already gone through parts 1 through 6. It's fantastic. If you haven't seen it, I'd advise you to go back. We talked about offering compromise, installment agreements, penalty relief, some myths and some guidelines, and a basic overview. So here is business and payroll taxes, and there are, correct me if I'm wrong, Bob Lyon, who is with me right now, and correct me if I'm wrong, but there's actually some IRS Fresh Start penalty guidelines that are helpful for business and payroll taxes. Is that right?
That is correct. A lot of people think that when they're dealing with the IRS and they have a liability, they approach it from an individual liability standpoint. But businesses oftentimes do owe taxes, whether from income taxes for a C Corp, or even pass-through entities may have payroll tax liabilities that they need to work out with the IRS. And the Fresh Start program came about partially through the economic downturn in the 2008 to 2011 time period. And one of the main concerns with the program was working with small businesses to try and help them get back on their feet if their hard economic times resulted in a tax liability. So they did produce guidelines that sort of help ease a transition from a business that has fallen out of compliance to pay their back liabilities and get back into compliance with the IRS.
So let's talk about some of the programs that are still there. The offering compromises, which is one of my favorite ways to solve a payroll tax debt, or even any sort of debt. It is really nice. There seems to be some clear rules, and the IRS has the program excludes some income-producing assets. Now, Bob, tell me, is it hard to get a business that's struggling to qualify for an offering compromise?
Typically, no, because the business, most of its assets are going to be for the purpose of producing income. That's the purpose of most businesses being in existence. So if a business is really not making much of a profit, it's still difficult, because any offering compromise is difficult, but oftentimes businesses will be in a good position to argue that there aren't that many assets that they're able to liquidate, and they're not making a profit, so the IRS should accept one lump sum payment to settle their tax liabilities.
So what you're saying is the qualifying is easy for the doubt of collectability, but that's not the end of the story, correct? There's a little bit more you need to do.
It's correct. Oftentimes, payroll taxes, at least the employment part of payroll taxes, will not be included in the offer and compromise. There's a basement that the IRS will be willing to accept, and those payroll taxes will often be imputed personally.
Well, that's the reason why you don't want to go for the lowest amount, because sometimes it doesn't make sense to offer and compromise on payroll taxes for a ridiculously low amount, because all you're doing is dumping off a corporate liability onto someone who will make a personal via the trust fund recovery penalty. Really, my question was, why should the IRS give this business a break when all these other businesses who are in the same thing, doing the same thing, don't get a break?
Right, that's a really good point. They don't want to reward businesses that cut corners by not paying the taxes that were owed in order to increase their profit margins, give them a competitive advantage over other companies that are competing against them. So there is a presumption that the IRS approaches business offers with that you need to overcome, that they are not being unfair to your competition by allowing you to settle your tax liability for less than the full amount.
And I think that's critical to get an offer and compromise accepted for a business, is you have to show something that it's a likable business. It's a business that wasn't this scummy kind of outfit, but really a stand-up outfit that something unanticipated happened. Maybe they lost a lease, maybe they lost the biggest client, they didn't see it happen. There was something that makes them sympathetic, and that, perhaps something that if their competition found out about it wouldn't be necessarily that outraged. And the offering compromise is really, when you're getting accepted for a business or an individual, it's always a situation where you would be better off if you actually had enough money to pay your taxes to begin with. That's really the thing. The IRS is never going to reward someone who intentionally harms their position. That's really one of the things about whatever offer and compromise you're looking at. Now, do you want to tell us a little bit about business payroll taxes and installment agreements?
Sure.
And the Fresh Start, because usually, and I see our first thing here, tell us about how the Fresh Start works with this.
Well, the Fresh Start program, in terms of payroll taxes as they apply to business liabilities, really increased the threshold that a business can owe in order to get into a streamlined installment agreement. Previously, it was any business under $10,000 could get into one of these express installment agreements. The threshold was bumped up under Fresh Start to $25,000, and that would require payment over 2 years, as long as the CSED falls outside of those 2 years. And this is what's referred to as an in-business express trust fund installment agreement. And one of the good things about this is the Internal Revenue Manual actually states that if a business is able to secure one of these express installment agreements for their trust fund liability, the Internal Revenue Service has directed its agents not to try and impute the trust fund recovery penalty individually onto the people in the business that were responsible for collecting and remitting those payroll taxes to the IRS.
Usually this is something we don't deal with. It just isn't cost effective when a business owes this much. If this is what they're dealing with, typically this is something they can handle on themselves. The important thing is to make sure you do not default it, because then we could lose some of those more favorable rules if things get worse. That when you're going to get an installment agreement, make sure whatever caused this problem to begin with is 100% solved. Make sure you have the boat heading in the wrong direction, because this could really be the thing that harms you. And the IRS loves to get people to get into installment agreements that they can't keep, and then comes back and say, why should we trust your word? You can't keep your word. So it's really critical that your ship is in order before you agree to any installment agreement. And as far as the trust fund penalty goes, there is a threshold under which the IRS will not assess it. They won't publish that because, well, but it is somewhere below $25,000. And now this might, and the threshold might be around $25,000. So I think there didn't do too much with this when they did it. They more or less said, hey, you know what, this is the rule already, so adding this will make a lot of sense and take a lot of work off of a revenue officer's
And they get the
plate.
good press that comes along with it.
Right.
It makes them look like they're more willing to work with businesses to settle their tax liabilities rather than just sticking the officers of the company with the liability.
And that is your friendlier IRS. This is Anthony Parent of Parent, and Win, and that wraps up part 7, correct, of our Fresh Start program. And in part 8, which is going to be our final part, we are going to talk about liens. So hopefully we'll see you there. Anthony Parent for Parent, and Win. Thanks for watching.